What's up, people? Welcome back to Invest with T Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. Seeing that this is my birthday weekend and I've already dropped some additional content this week, we'll keep this one short and sweet. So in today's video, I'll go over some quick highlights from the earning call that Neo had earlier in the week, cover some of the new ratings that we received post-earning call, and wrap up with the portfolio weekly performance expressed in percentage gain or loss. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. The last time I covered Neo, the stock was seeing some massive sell pressure and was trading around $34. And at the time, this is what I said. As I said, lots to be bullish about when it comes to Neo's business fundamentals. If you're planning to add it to your position, my perspective here is that it's probably a really good time to do so. The last thing that I'll mention here, just like we have a strong support at the $34 mark, heavy resistance is going to come in at $40. Now, for all the reasons that I mentioned, I believe that we'll break past that resistance level by the next earning call, which is expected to be in late October, early November timeframe. That was about a month ago, and here we are now post-earning call with the stock price trading at $42.67. Had you bought then, you would now be up just over 20% on those shares. Not too bad, right? So how did Neo do? Despite all the supply chain challenges Neo faced this quarter, and a temporary factory shutdown for retooling, they were still able to deliver 24,439 vehicles in Q3. The revenue from those sales represents a 102.4% year-over-year increase and a 9.2% increase from this previous quarter. Gross margin came in at 20.3%, which was an improvement from the previous quarter. That came in at 18.6% and much better than a year ago when we were only at 12.9%. It was also encouraging to hear their CEO, William Lee, state that they were seeing some really strong demand with record orders coming in for October. Then add to that their CFO also stated, and I quote, "As we broaden our user base and enter global new markets, we are determined to further expand our sales and service network and expedite the swapping and charging infrastructure deployment to better reach and serve more users worldwide." End of quote. Neo closed Q3 with $7.3 billion on their balance sheet, making them quite well capitalized to support their expansion efforts into the European region. The forward guidance for deliveries in Q4 is between 23,500 and 25,500 vehicles. With Neo having only delivered 3,667 vehicles in October, we need to see at least 10,000 posted in November to ensure we are on track. Overall, I'd say it was a fairly good quarter for Neo, and once again, they beat analyst expectations on the earning per share metric. With those results in mind, the sentiment around Neo has clearly shifted. Analyst Eunice Lee from Bernstein is currently the only one recommending a hold rating for the stock, and he has a $45 price target, so still some upside from here. In his view, Neo should have guided to stronger deliveries. Personally, I'm of the opinion that you're better off under-promising and over-delivering, and so I think Neo played it right. Stock analyst Mingsun Lee from Bank of America came away from the call impressed and reiterated, as a result, his buy rating with a $65 price target. Overall, you can see the full price range for the Neo stock, and the main two takeaways for me are as follow. Number one, we have no sell rating, and the consensus sees the stock above $50, which is pretty bullish. The last thing I'll mention here is this. Neo Day is set for December 18th, with the expectation around new models and battery tech to be announced. The ET7 launches next year, and European sales will be flowing in. The stock will continue its upward trend from here, and it will likely, in my opinion, hit a new all-time high in the next 3 to 6 months. Again, this is not financial advice, simply sharing my perspective based on what I believe can be reasonably expected. With that said, let's switch over to the weekly performance review for the portfolio. As you can see, lots of enthusiasm going into the week, especially on the crypto front, right? Bitcoin and Ethereum hit new all-time highs, and at the top, I was up by 7.46%. That sharp drop that you see there, well, that can be attributed to three main things. The first one is the high inflation number from the CPI, and people likely taking profit as a result. Then add to that some portfolio rebalancing by market participants in preparation for the last push into year-end. And finally, the Tesla stock dropping from the Elon stock sell pressure. Which, by the way, if you're waiting for a nice buying opportunity on the Tesla stock, this 15% drop here would be a great buy signal. Again, just saying. At the lowest point of the week, I was down by 4.48% before starting down the recovery path and closing the week at a loss of 2.29%. I expect upward momentum from here to resume in the next week or two. And on that note, I'll leave it here for today. If you enjoy the content, make sure to smash the like button and share with others who you think could benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you don't miss out on any future content just like this. As a reminder, I post every Sunday and now also one additional in-week video for more crypto-focused content. Thank you for watching. Stay humble, hustle hard, and I'll see you in the next one.